The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania, zip code 19143. Boys and girls, we've got some big things happening. I posted the chart for the DAX. I'm quickly going to post the chart for the FTSE. We talked about those yesterday. Both of those patterns have completed. They've had a little bit of a rally in here. But the main questions that I'm getting this morning, and by the way, we're going to have Rich Anderson as our guest at the half hour. We had a big grain report yesterday that took the grains down into new low ground, and it looks like Chinese people have stopped eating. First time in the history of the world, a whole civilization is not going to eat anymore. Let's take a quick look at, people are asking me about the gold market, and all I can say is this is what we were looking at coming in at the beginning of the week. We were looking for the market to come down to that. You'll see that pennant there that we have, the little triangle. That's basically a 3 drive sitting right at a 78% level and also a 50% retracement. And of course, now we're trading at 12, just about 12.18. You can see that we could easily get to these 12.27 area and possibly even 12.30 on this move. So this is what we're watching here. It should work. Whether it works or not, we don't know, because sometimes the patterns work, sometimes they don't. We've had a question from one of our listeners across the pond, all the way over in Australia, to take a look at the sugar market. And so I'm going to put this up to let you folks take a look at it. And then we got a couple other questions here. We'll try to cover those. This is the long-term sugar going on the last 4 months. You'll notice back here on August the 20th, we were having that eclipse. We had a perfect ABCD pattern. You'll notice if you look at it really closely, you'll see a 3 drive pattern with the light green triangles that are there, was from the 16th of July all the way out to the 20th of August. That's a perfect ABCD structure. That's one of our favorite patterns. You see pretty much the same thing at point D too. Now what I've done here, folks, is all I've done is I've taken the BC swing and I've cloned it. In other words, I've duplicated it, moved it forward. It has nothing to do with time. It has to do with price. And as you can see here, you know, sugar is now up almost $2,000 from that low. And it's really, you know, right in an area where it should run into some resistance up in here. Now, what I did for our 24/7 service, I sold it 2 days ago. Some people stayed in it with a trailing stop, but I was inclined to take profits there of around $1,100. So that's what he did. And now I'm sitting here wondering if, in fact, I get, you know, moving around, looking at these things, whether I got out too soon, which I'm sure I did. I can see that right now. So what I will do is I will wait for a nice pullback, and it will come. And so we'll pay attention to that. But that's another one that looks pretty interesting. Now, if you'll remember, egg on my face. Marshall, I wake up with egg on my face. No, you have to do that when you're trading, folks. My gosh, you're not going to hit every low and every high. You know, that's just not possible. There's just no way that is going to happen. Another question that someone brought, and this was, we were talking about Alibaba here. Here's another 3 drive to a bottom pattern. We went right down to that 152 level. We got all the way up to 165 yesterday. So that's had a 13% rally in 3 days. Nothing to do with the news. When it was going down, it was because Jack Ma was resigning. It went up because he was resigning. So you figure that one out. Anyway, that's how the news works, but that's neither here nor there. Another one that we've been watching as far as a 3 drive pattern that looks interesting, of course, and that is the Australian dollar. And if you'll take a look at this one here, and the Australian dollar, we spent a great deal of time on the Australian dollar this week. You'll notice this is a 4-hour chart because you can see the big the three 1.618 expansions that are there. But what was more important about that was the fact that if you looked at this on the daily chart, you'll also see the same type of pattern on the daily chart. And then if you really wanted to get into it really closely and went in and looked at it on the weekly chart, you're going to see that the Australian dollar was setting exactly at the 78% level down there at that 7,100 level. Now it's trading $1,300 above that level, and it's in an area where this is your profit objective, because if you're only risking 30 pips, which is $300 on a $70,000 contract, you've made your first profit objective on this. So you certainly want to take some off the table, unless you're super greedy. And being, like Gordon Gekko said, greed is good. But remember that, it's also a business of making money. You always want to remember that you want to be able to have as much month as you do money. There's nothing worse than having too much month at the end of the money. That's not it. That much is not very much fun. So anyway, watch this Australian dollar in here. So we've got a lot of things happening with the currencies today. There must be something big astrological, but I'm not sure what that is. We don't have anything really super we have a full moon coming up way back on the 24th of September, which is quite a bit away, but that's neither here nor there. We do have a lot of things yesterday certainly happened, but we'll see whether these things move on a little bit. Let's take a quick look here at the euro, folks. We've got take a look at this because we just hit the euro spot on. 1 second, let's just get this up here and take a look at it. This is the 4-hour chart. This is also the one that we talked about Monday. There's our price objective coming in almost exactly there at 116.83. I believe the high so far has been 116.85, but you never know. Anyway, that's an ABCD pattern coming in at a 78% level. Whether that means anything, it's just a pattern. Like all the others, we don't know whether they're going to work or not. But let's take a look at the U.S. dollar, because the U.S. dollar is telegraphing the same thing that we're seeing in the euro, only the opposite, because it is the exact opposite. When you're long the dollar, you are short the euro. Now, if you'll notice here, the dollar got right up to our price objective there, just a tad above 95.60, and now we're trading below 94.50. I think we're trading a little below 94.50 right now, and you can see the ABCD structure on this would take it all the way down to 93.20, which would be a very significant breakout on the downside. In my opinion, that's the way it looks from this particular advantage right here. So we want to watch that very, very closely. So we've got a lot of things happening today. The Australian dollar, we got sugar, we got the dollar index, the euro, and a few other. We got a lot of commodities that we'll talk about with Rich Anderson at the break. We got wheat, corn, beans. All of them are under the gun, and it looks like it's time you open up your basket and say, let's go shopping, because one thing we know for sure, people have to eat. And if you got the U.S. dollar down, that means they're giving them away at reduced prices, which is also good. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, back folks, and I posted a chart for Apple. It's a 15-minute chart over the last 10 days or so, but all I wanted to do is to reinforce the fact that these patterns work just as well on stocks as they do on futures and on Forex. The difference is stocks move a little slower. They don't have the volatility that some of the other things have, but that still works very nicely. You can see the really beautiful ABCD pattern. When the market bottomed the other day, we had a nice strong rally. Look where we stopped yesterday, folks, right at the 61% retracement at 220, and Apple was due sharply higher again today. So all you have to do to figure out where you think Apple is going to go is to measure the low that you had at 216. You rallied up $9. So if you add $9 to the 219, where does that take you? Apple should make 228, right near the old high. So whether it's going to hit it or not, I don't know, but it's certainly a completed pattern, and it does, verify that these patterns do work on, some of these different things. And so the main thing that you want to remember is they don't work all the time. It's all about risk control. You have to determine how much money you're going to risk and whether it's going to work or not. And I had several things about the stock market. Folks, if we go above 29.15 in the E-mini S&P, it's time for old Larry to get on his old burro Walter and head out to the Mexican Rockies and go into retirement. Our good friend Rich Anderson has gone into retirement as of Monday. He'll be on our show today, but I think I should go right behind him. I'll probably still do the radio show a few days a week, but I'm such a good short-term trader. But if this long-term projection that I'm looking at is wrong, I'm going to be shocked, but I get shocked a lot. So the key is if that S&P gets above 29.15, we're 15 handles away, which we could easily make that. without too much trouble, but we'll have to see, what's going to happen, from that level. So we'll just watch it as we go through. We'll have Rich on here in just a few minutes. We'll be talking about the corn and the beans and, so many other things that are going on here because they're at really great levels. Now, we've been talking about this silver market for quite some time. Had a big move in silver, well over 35 cents from the bottom we were looking at. But you'll notice here, this is one that we were watching from our good friends at the Elliott Wave thing. You'll be able to see here that we're at record bottom here in the open interest. I mean, you can see the commitment of traders. You have record short position, and they're starting to cover now. So that means that you're going to be looking. And if you remember, we also talked about the number of bulls versus the number of bears, and that was also telling you that you were having a really strong possibility for a rally. Plus, we were right at that 78% level, on the monthly chart, which was very, very important, and that so far has held up. I'll show you that so that you can take a look at it because it went right down to 1396. Matching the old low pretty much from 2015. And that rally from 2015 was $7 an ounce. That's $35,000 if silver takes off like it certainly could. We've already seen that gold has started to move pretty much like we had thought, and looks like it's heading in the right direction. Whether it's going to continue in that direction or not, we really don't know for sure, but we do have to watch it. And that's another one that is very, very important to look at. Someone's asked a question about the 3 drive patterns. How often do they work? Well, my guess is they're somewhere around 8 out of 10 times. And the other 2 times they're gonna bite you. But your risk is always going to be 1/3 of what you're trying to make, and you never know how much you're going to make. So the $64 question is, do you have the ideas or the chutzpah to get in and say, yep, I'm going to take this trade and see if it works, and if it doesn't, then we're going to be look at something different. Now, there's a stock out there that is in the news, and I haven't charted it today, and I was on my list to do that. And it's a chart of Goldman Sachs, and I want to bring this up if I can because it's making a record. I think it's never been down this many days in a row. Someone said on CNBC today. I didn't have time to test that, but that is in fact a really, I don't think that's right, because back in the old days of the crisis, how many days we've been down? We haven't been down that much. It's just down a little bit. Let's take a quick look at it here. Well, it's sitting right at a 61% retracement. This would be the time to buy Goldman Sachs. If you like to buy something, and this is, let's just get this up here so you can take a look at it. Okay, Mike, we're going to talk about the wheat, the corn, and the beans. But my opinion on the wheat is we are really close. I'll show you what I'm looking at in the wheat. I'll just get this up here so that you can take a look at it. We're setting right at the 78% retracement of the low we made in January. You'll notice that we had a really nice ABCD pattern, rallied about 25 cents, and then we came down sharply. And believe me, wheat was not involved in that report yesterday. It was being drugged down by the soybeans, and then also the corn and the soybeans turned around and actually closed up on the day. So whether that means anything, I don't know, but I think we're pretty close in here. Whether we are, really would be good if we were over a lunar cycle, but in fact, we're not over a lunar cycle, so we have to take that. We'll cover that when we're on with Rich. Someone's asked a question about the hog market. The December hogs continue to look strong. They paused here for a day or two, but it appears that the hogs do want to go higher by about another 6 cents. After they came off that low at 44 cents, then you'll be able to do it. Boys and girls, I need to take a break here. I'll be back after the commercial. Thank you very much.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got our good friend Rich Anderson on the line, I believe. Rich, how are you doing?
Great. Good morning, Larry.
How is retirement treating you, Rich?
Pretty fair. You know, I'm just gearing up to trade more stocks, amongst other things. I mean, still trading a lot, but just
you're down to 12 hours a day instead of 16 hours a day?
Right.
Rich, what do you think about the grain markets here? We had this report yesterday that knocked the socks off the wagon, so what are you thinking here?
Well, if you notice, there were the one that did bounce back was the beans, right?
Mm-hmm.
And that's because there's a lot of time cycles due, number one.
Mm-hmm.
Number two, cash beans in the Gulf, FOB, right on board, that's what FOB stands for, is actually cheaper than the 25% discount to the Chinese. Mm-hmm. So we're the best deal in town for that. Mm-hmm. The big surprise in the corn, record yield, record year count, record weight. And I think there were a lot of guys that were anticipating it might be a smaller number. And so those guys get blown up and they get knocked out. And then we'll get back to usage, and low prices is what solves low prices, and usage will increase. We'll probably get some going on the trade talks. So I think it's going to set up some pretty interesting things. You know, I'm watching the week closely. If it tests the June, July lows down there in that 490, I think that'd be an excellent opportunity. The markets that caught my eye the dollar. I know she sent out a chart on the dollar this morning. I was just working out, watching Bloomberg, and just looking at a close chart, and it looks like a head and shoulders type pattern that if it falls through, will eventually drop. I mean, we've got a lot of chaos in the world. Look at Turkey raising their 5-day repo rates 24%. Argentina's got the inflation up in that neighborhood, a year ago. My buddy said he could get 20 pesos to the dollar, and now he said last time he was down there could get 40. Not, black market, obviously, not, not official exchange rate. But so we've got some interesting things. And of course, if the dollar does eventually roll over here, that'll make all of our commodities more attractive. So I'm looking for some pretty interesting opportunities. The ones that I think are most interesting right now are gold and silver. I'm not a big metals trader, but when the situation develops and it catches my eye, I zero in on it.
Well, the silver is starting to move a little bit, and gold's been moving, since, about a month ago. They're starting to look better. Rich, what are you hearing from your farmer friends and stuff about the tariffs? Are they getting hit really badly with this, or what's going on there?
Oh, absolutely. If you're somebody that sells beans to the West Coast, there's no bid. So it's a 25%. Basically, the elevators are not bidding. So you can't sell them. You got to move them east, or you got to process them. Crush them. So yeah, it's a completely changed thing.
Well, won't there be a time where China?
China eventually will start to buy again. I mean, they sell way too much to us, and then you'll see these things elevate. The 25% that they've been discounted. But they're actually discounted more than that 25% now. They're actually approaching value levels, in my opinion. So I'm just looking for the market action. But yeah, the farmers to the west, but anything PNN, Pacific Northwestern Railroad, anything going west, there's no bid. So the elevators that buy for those trains, they don't have any bids. So they'll be putting her in the bid.
Okay, We've got a question from someone up in the state of Washington about the corn. I posted the December corn chart. We had that really nice pattern down there at that 356. We rallied up about 13 cents. And then with yesterday's action today, it looks like we're getting ready to either attempt a double bottom in here or continue lower. What do you think about value of corn here at 350 a bushel, Rich? What's your feeling on that?
Well, I think it has value, and volatility. By the way, the implied volatility, the price, the multiplier you have to use to pay for an option. I mean, there's some real value out there, like in buying July corn calls, and selling July corn puts to pay for them. I mean, you're practically giving away these calls. They're under 20%, volatility-wise. And so I think you can put some trades on as you're watching for a double bottom test. And if it doesn't hold here, it'll hold at 330. I mean, if you draw an extended trend line off the lows back in September of 16 and November of 17, we're coming right into the trend line on what it may eventually end up to be a double bottom. But when you have range expansion like we had yesterday, you have to wait for a little bit of consolidation, contraction. And then take your position. I mean, that's the way you taught me to do it. I mean, you're the teacher.
Yeah, well, but the students surpassed me many years ago. Rich, I have a question about the weather. I was talking to Cy yesterday, and he said with all this rain coming in that some of this eastern corn and soybeans could be affected either by late harvesting or even too much water. Is there any truth to that, or?
Absolutely. They're talking up to 30 inches of rain. The soybean plant, if you've ever seen one, it's not it's not like a corn stalk, which is real thick and strong, relatively speaking. And so you get pounded with 30 inches of rain. The fields just turn into a mud pit. And the beans get knocked down. And now instead of being, 24 to 30 inches off the ground, they're 4 to 8 inches off the ground. Not to mention pounding the rain, the beans, a lot of the beans that are really dry get knocked out. Oh, absolutely. The crop that's being most affected apparently in the Carolinas is sweet potatoes. but of course they don't trade those. And it also has some impact on the hogs. And the slower the storm moves, and depending on where it moves, the more rain will drop in certain areas and may make harvesting of some of those crops of soybeans and some cotton you're not able to do it.
Well, it's certainly interesting to see how much the weather affects some of these things. But, when we're this time of the year, about the only thing that would make these things go crazy would be if they reduce these tariffs, or if we had an early freeze where it would hurt the beans. But pretty much that corn crop has been made, pretty much, isn't it, Rich? I mean, that's not much they can do to that.
The weather, at this point, I do not believe the weather would have any. The freeze cold temperatures would not have any material effect on either corn or beans, because both, they're ahead of schedule rather than behind. So I don't think that's a non-issue at this point. Too much rain will definitely affect the beans in the Carolinas, and may have some dislocation as far as marketing of hogs temporarily for a week or so. And power outages. I mean, they're talking about the whole state could be without power, and processing plants, without power. Now they've got generators, but depending on how much rain, can the workers get there? One of the problems that the pork processors are having right now is they got the kill capacity now. They got the, the floor space, but they're having a hard time finding enough workers.
Rich, what about the hog situation as far as this flu that's going on over there in China? You hear any more about this?
No, but I think it's a real deal. It's awfully hard to contain, because that virus can survive in a freezer for up to 1,000 days. And even if you spray your trucks and you take a shower and spray your clothes, and you still have birds, that can transfer. It's awful hard to get your hands around something like that. And I think that's one of the reasons they're going to eventually, want to buy more of our pork when we start doing business with them again. The thing that would be most negative would be if they kill off too many hogs, and that would reduce the meal demand. I don't anticipate that, but I do think it's going to put a floor under prices.
Oh, that's great. Hey, Rich.
That's an opportunity.
I know you're busy today, but I want to thank you for being on, and I hope you enjoy your retirement. I don't think it's going to be any different. You're probably still going to the same office, right?
Oh, yeah. I didn't give up that.
God bless you, Rich.
For better or worse, not for life. I'm not for lunch.
Hey, thanks a lot, Rich. I really appreciate it, buddy. Rich Anderson, Anderson Capital Management. We'll be right back after these few words.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back, and I wanted to bring up the chart. I've had a request to take a good for you, Dudette. Take a look at this price of Apple. As you can see here, we're up quite a bit. We're up about $4 is not much on a $200 stock, but we've almost matched yesterday's high. When you get above that, you're going to be looking at another $4 potentially higher, but we're at a pretty good interesting. You notice the thing opened and it actually went down just a little bit on the opening to 221, and then it rallied $3. And that opening low was exactly 61% of the low we made late yesterday. So Apple follows the 61% rule quite a bit. So it's very, very important to look at it right here. So pay attention to these because it's going to be an interesting day, as always. Now, we're right at the magical level of 117 now in the euro, folks. That's that number that we were talking about early this morning. Let's just get this up here so we can take a look at it. You'll be able to see we're just a tad above it. That means we're probably going to go a little bit higher. And someone's asking to take a look at Netflix, and let's do that. Let's just get away from some of the futures markets and get up and take a look at the old Netflix to see what we're doing here. And we will have a pretty good idea here in just 1 second. See, Netflix is with an N, so that doesn't take much. So there we are. And you count to 10, and you'll be, oh, we've got a nice pattern here. Yeah, we actually, hold on here, folks. You'll be able to see it here in just a moment. And there you go. It looks like, well, we pulled back to a 50% retracement. And now it's looks like it's headed higher like everything else because we haven't taken out last week's high yet. But on the pullback, we got down almost exactly to a 61% retracement. Let me double check that because it looks like to me it was exact. And it was. The exact low was, 335, and that was the exact 61% retracement of the last week's range in August. So this is acting, and the ABCD structure on this tells it's going to 396. So maybe all of these are going higher. We hit 2905 now in the S&P. That's the 78% level, folks. If we get to 2915, that's it. That means that my bearish stance is certainly wrong, so we want to watch it very, very closely. That's the main thing to keep an eye on, and whether that's going to be the case or not, we have to wait till the end of the day. This is what we call amateur hour, when people come in and buy at any price in that first hour, and why that occurs, is anybody's guess, but we'll keep an eye on it. All right, let's move on to the next question that someone had, and that question was about Dr. Copper. And if you'll remember, last week we were mentioning that the copper was at a very, very critical level. And let's just give me a second here. I've got to pull it up here. There we go. And you'll see here that we're up right near the old objective here now in the copper. We were looking for it to get around the, in fact, we're above it. I believe where copper is trading above 270 now. If someone would check that for me, because it looks like it's completed that ABCD level up in here. from that 260 level. So that's another one that looks very, very interesting. You wonder what happened right at the break, folks. I have allergy attacks, and when I start to sneeze, it really causes a lot of problems, and so I had to turn off the machine for just a second. It happened to be right at the break. So that's the number, Marshall. Thank you. 270 is the profit objective that we were looking for. As you can see on the chart, there it is. So whether it's going to go up from here or not, remains to be seen. So we'll see if this is going to be the case or not. So anyway, let's watch that, because this is going to be an interesting one. Remember, the price objective in the gold is up around the 321 to 333 level on this. So we'll see if that is going to be the case. So we'll watch it very, very closely. Okay, let's move on to the next one here with the someone asked a question about the gasoline futures, and all I can say is, we had a little bit of a rally due to the hurricane, and we're back into that. We didn't quite make our profit objective down there at 190, but it started to move up, and part of it is due to the hurricane. But as you know, once that hurricane is over, things are going to be, really, really hard to get some type of a situation where you're going to be looking at what do you call a bullish situation, because the crude oil market has had a pretty big correction. We were looking for that to occur. You'll notice that the crude oil yesterday had a really nice rally up to that 61% retracement at that 70 and change level, and then we broke all the way down, to 69 and change. So that is one that's looking like it certainly doesn't want to go a great deal lower. Boy, if you got filled at 29.06 on that one, dude, that looks pretty interesting anyway. So let's keep an eye on some of these, because they do have a tendency. We're real key levers, folks. We're hitting so many key levels on all these things today. I don't know if it means everything for everything, but look at it. We got copper, we've got gold, we've got the euro. My goodness, we've got soybeans, wheat, corn. A lot of them. Maybe there's something really big astrological out here that's going to make something happen. So I don't know. The interest rate market, to me, it's going lower. That means bonds are going lower, interest rates are going higher. I don't think there's much they can do about that. And that pattern in the bonds and the notes is extremely bearish. We've talked about that over and over again. And, we're trading pretty much right where we were here. You can see here we're trading right around 142.16. We broke 142 on the downside, had a little bit of a rally, got up to 142.22, but this interest rate market looks like it certainly wants to go lower. Mike, the silver is in the same situation as gold, only it's not moving nearly as quickly, but the longer term view on silver is really, really bullish in my opinion, because of that long-term 78% level, and the fact that the number of bulls versus the number of bears, and this is from the Elliott wave people. If you'll take a look at this, that is about as bad as it gets down there at 8%. So that's a bearish extreme. What we'd like to see is we'd like to see a sell-off. I mean, we've been friendly to this stuff and long it for, it's the most hated commodity, almost the most hated commodity. Being long Trump would be the number one, but the silver's got to be up there, with only 8% of the people being bullish. But we'll watch. But it looks good. We're holding on to that one, and I think it's got a lot to go. And we'll see how that's going to end up. But we're at real critical levels here in the euro, the gold, the copper, just a lot of them. And it doesn't take much. I mean, slightest bit of inclination from some type of a trade thing, or somebody fires something across the bow of a ship, things can move, very, very dramatically. But right now, it looks like we're at some real critical levels. Folks, the real key level here, let's just get this up here and take a look at it, because we've exceeded, we almost hit the exact 78% level here in the S&P. Let's just get this up here. And There you go. Yeah, you're right. He is a commodity himself, because if it weren't for him, there wouldn't be any news, because it would all be so darn boring that nobody would pay any attention to it. So the key level there was at 28.65. We hit that in that S&P spot on 2 days in a row. And then we had, the big move, and we've been heading higher. So pay attention to that. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted a chart of the NASDAQ overlaid on the New York Stock Exchange Index. The New York Stock Exchange Index is the real market, but unfortunately for us old-timers, they don't count that anymore. So this is one of the factors that I'm looking at, but it's really, there's about 100 stocks, well, less than 100 stocks that are doing all this, but it's still going higher, so we'll wait and see. The key level is 29.15. If we take that out in the S&P, then my premise of what I've been looking at is wrong, and we might go up forever or even longer. Infinity times infinity, as my grandsons would say. Keep an eye on it because it's very, very important. from my perspective of looking at charts over many, many years. The gold and silver have turned the corner. We've had a pretty good rally here of about 40 cents, a couple of $1,000 here in the silver. We've rallied a great deal more in the gold. The gold is, well up over $6,000. It's rallied over $60 an ounce from the bottom, so that's a positive thing. So get ready to buy that on any ABCD correction to the downside, because I think you'll eventually get a correction, maybe. It's still in a bear market, everybody's saying, but on the shorter term basis, we're reading into areas where we should run into a little bit of correction, at least from a short term time frame. Next week, we're going to have Stan Harley as our guest, and someone's asking a question about the grains. The way to handle the grains, folks, is to wait for a short-term pattern on the hourly, 30-minute or hourly chart. That's the way I'm trying to handle it. I'm watching the magical price of $5 in Christmas wheat. We only hit that one other time. That was about a year and a half ago, so we might go down and touch that again. The soybeans are acting relatively well, given the negative news. They've been holding up good, and of course, we've been trying to buy the soybean oil, for several days in here, but unfortunately, it has not gotten to the point where we want to buy it yet. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!